Welcome back to the Eric Krown Crypto channel. Wishing you a happy and healthy start to this nice Sunday macro morning over here as we get prepared for the end of the year and probably even Q1 of 2023 as well. So this is going to be focused on the very high term timeframes. We're going to talk about very long term timeframe ideas. Nothing in the short term. If you want an analysis on that, check out yesterday's video. Basically the same video that we've been having for like the past week now. That's how slow things have been essentially. But today I want to present a little bit of hopium. Yeah, a little bit of hopium for the perhaps not so distant future, and then some statistics regarding that, as well as a few other scenarios here too. Anyways, I wanted to start off this analysis first and foremost actually on the Krown chain application, which reminds me I forgot to talk about the damn sale going on. We have a Black Friday sale going on right now for the next 4 days and 14 hours or so. No FOMO, of course. If you're interested in any one of the programs, I humbly implore you to just watch the promotional videos that accompany them over here on the store. They'll explain who they're for, who they're not for, so you can get an idea of what to expect. All right, sweet. So let's jump back into it over here and start it off with the dashboard on the Krown chain application. Again, you can find this in the link in the description below. All of this data here is free if you're on the daily. So first and foremost, I want to bring attention to the global open interest. Now, we are at the lowest global open interest, representing basically open leverage positions in almost 2 years now. The last time that Bitcoin was seeing these levels of open interest, or around 6 billion or a little bit below 6 billion, was basically in 2020 actually. Yes, 2020, when Bitcoin was around the $10,000 to $13,000 range. Now, I also want to draw attention to the fact that over the past year, and we could even extrapolate this to 2 years, we've been seeing a nice natural downtrend on the open interest that the market slowly gets deleveraged over time. I mean, that really is one of the major purposes of a bear market, is to wash out the deleveraged people, or wash out the over leveraged people and deleverage the whole market. So in this case, you can see that all of these major lows, all these spike lows, going back to basically the last all-time high at 69,000 bucks, have been met with a slow and steady sideways period that follows afterwards, and a bit of a, another bear market rally. So you saw the same thing over here in December of last year. That was your rally from like 50,000 to 50, something rather, somewhere around there, above 50,000 basically. I can't actually read these numbers all that well. In this case, we saw another one in January, again of this year. That was your rally from about 35,000 bucks all the way up to 45. Actually, it almost got to like 46, 47 right there. Then again, we saw another spike down over here. This was, of course, the May rally, or May attempt at a rally. And then we saw another one in June. That was your rally from basically like 18,000 to 25. And then once again, seeing this area hit, if you were to kind of imagine a regression from all these major lows here, we've seen this on the last major dump bola party to that our current lows at around 15,000 bucks or so. So, what's most likely to happen from here? At least a bit of sideways. So that's exactly what we're seeing right now. I mean, that's what we said last week and the week before that when we started to really identify this over here. Sideways is the most likely thing within this range between about 17,500 highs versus about 15-ish to 15,500-ish lows. Is it going to be an attempt at a greater rally from here? Perhaps yes, definitely possible, but you will very likely notice that all these bounces have been getting weaker over time, percentage-wise. So, if we were to see a rally, probably somewhere around 17.5, I think would be the major area. But things don't really change for the higher term time frame as long as Bitcoin's below 18,000 bucks. So 17.5 would, be reasonable. If things get really crazy, if we were to see like a true bear market rally, like a really scary one, that would probably be somewhere around 19 to 19,500 bucks. But again, looking at this, we're seeing the intended effect of the bear market. So this is good news for very long-term people, very bad news for short-term speculators who, are just playing the long hold game. But we are starting to see some serious progress within this and resetting it back down to the levels where the liquidity bubble really began, which was in 2020 again, coming off the Rona time. So moving on to the next one, the leverage ratio, which literally represents, the leverage ratio. Let me just remove my face. There we go. Goodbye, Mr. Rat Face. It's right here. And you've seen that that's taken a major dump for the first time basically in ever, coming back down to levels that haven't been seen since September, but hey, at least it's something right there. But just another sort of things, in the same vein as, hey, we are starting to see some deleveraging going on here. And then also while we're on this page, the daily funding rates, we did see extreme lows, levels that we haven't seen in months at this point. It's got to be like 6 months plus. At the height of the November dump thus far. Now you would expect that, but again, you expect extremes on this during extreme movements, and that's exactly what we experienced right there. So, a lot of things are starting to align with, hey, if you're long-term minded on this asset, we're a lot closer to the low than not. In terms of like timing it, I think that could happen anytime between now and basically May of next year, 2023. In terms of price-wise, if Bitcoin comes down another 20-30%, I don't consider that, personally, I don't consider that all that much. I would say that's a very incendiary statement. And also not like fully accurate, just because like 20 to 30% is a fucking lot, but it's the difference between like $15,000 to $12,000 to $13,000. That's kind of what I'm looking at right there. So I do want to just remind myself, and perhaps remind other people out there as well, if you're very long-term minded, don't need to get too damn cute in these regions. And personally speaking, while I've not gone 100% in, and I will not go 100% in, ever really, but at $20,000, I went about 25 to 30% in, and around this region, I added another 15 to 20%. And if Bitcoin goes a little bit lower, I'll do the same thing as well, remaining with at least 25% for if and when Bitcoin, turns around. I mean, there's always a possibility that it never does, but that's a calculated risk, I suppose. All right, sweet. So now that we've gotten through this, let's go into the actual charts. We're actually going to start off today's charting with Dixie, the dollar index, because we do have a weekly, we do have a weekly closure, but more importantly, we have a monthly closure coming up in 3 days and 15 hours actually. So a few things of interest right here that I think call into question that this current rally that we've seen might actually be done. I'm actually heavily considering this possibility now for several reasons. So I'll go through the full explanation of it. Similar to how we had these extreme volatility signals on the weekly, which by the way, probably does bounce in the short term. This is not an analysis on the short term again, but similar to how we observed two extremes on a weekly BBWP for Dixie, the monthly is starting to show extremes on the monthly volatility indicators right here, similar to what we saw, or compared to what we saw in March of 2015. So I would count this as actually double extremes in this case. Yes, it's a monthly. Yes, it goes a lot further out, obviously. And that's going to be accompanied with two other things. One, the monthly has bearish divergence, and like very obvious bearish divergence here too. The monthly price is actually making significantly higher highs, and monthly RSI making lower highs. I mean, this is like picture perfect divergence right here. Is there going to be a third drive on it? Maybe yes, definitely possible yes, but we're starting to see some signs of actual long-term topping. On top of that, we can also see that the monthly jewel has all this upside curvature. So this is not necessarily a downside signal just yet, but the last time we saw a turnaround in this region was basically the last major high before consolidation in April 2015, which was this area right here. So you can see that things did trade sideways after that. Yes, it did go for a nice retracement and ultimately a continuation. So could we get something similar to that and then put in the third drive? Possible. That would be definitely the bullish case for myself. But in the meantime, does that mean that things can pull back significantly more? I mean, we've already hit two of our major targets on this one. That was basically around about $1.05 to $1.05.5. If it wants to take another step to the downside, I'd probably be looking somewhere around $1.02.5 to $1.03.5, something like that. Now, of course, this can be extrapolated into the quarterly chart, which is not closing this month, but closing next month at the end of the year. And I think things start to get very interesting here because we can observe that there is actually hidden bearish divergence brewing between the 2001 highs and the highs that we're experiencing right here. Price action has made lower highs, but RSI has made slightly higher highs. You can barely see it there, but this one is certainly higher. It is 70.63 versus the prior high, which is 69.75. So, it is in there. That would obviously imply that this needs to confirm as a local high, which would imply that we need to see a quarterly closure basically below like 101 or 101.5. So that's like very far away. I mean, that's not happening until like March or I guess April at the minimum of 2023. But hey, in the short term, can this thing come down more and come down closer to like, $1.02.5 to $1.03.5? Yeah, definitely possible. So generally speaking, that's going to help risk on assets. Hasn't really been helping Bitcoin recently because Bitcoin has been having its own issues with the FTX situation, obviously. But the thing with that is that is that, when that sort of when the debris of that whole, sort of situation gets pulled away, Bitcoin's going to have it's going to have a lot of reasons to rally in that case, because it did not participate in any of the rallies that we're seeing in traditional markets as of right now. So yes, okay, so we've gotten through that. Let's go into the next one, or should we even we can just quickly reference this as well. Dixie monthly stochastic also turning down and about to get below the critical zone for the first time in very, 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 very long time. Again, the last time we saw a turn down from this region was actually the height of this rally over here. And so we're seeing something over here, and very likely to stay down as long as Bitcoin, or as long as Dixie's below 112.40. So yes, I do think that this one probably has more. Anyways, now moving on into Bitcoin. So where do I want to start this analysis? Let's actually start it over here on Coinbase, in fact, because Coinbase trading this weekend, and a few things of interest. So first and foremost, I wanted to highlight the extremes on volume. So volume, again, represented by this bottom pane right here, this grayed out stuff. Now, I really think that in a lot of cases, when people talk about volume, it's a complete fucking meme. To be quite frank with you, it's a complete fucking meme. The reason why I say that is because people make a fucking mountain out of a molehill when talking about like very short-term moves in volume, and I just think it's incredibly fucking arbitrary. Can I be proven wrong on that? Sure, go ahead. But on extreme moves, when I'm talking about extreme moves, I mean like parabolic all-time highs and just devastating crashes, we do expect to see volume extremes. That's when I really do start to pay attention to it, because as you can see here, what do all of the major highs and lows have in common? Major volume extremes on Coinbase, which is, in my opinion, like one of the most legitimate US-based exchanges. So with like a decent history, it's not perfect obviously, but it's decent. And we've seen the biggest volume by far on the November Dumbola party. And here's what's even more interesting about this, is that the volume is measured in coins traded, not US dollars. So when Bitcoin here is trading at like $16,000 and it's showing even a similar volume to what we saw over here in the Rona times, that where Bitcoin was trading at like $5,000, that is significantly more actual dollars exchanging hands, of course. So I do think that deserves a lot of notice. And so what I've done is I've marked off all of these major extremes. They're not all macro lows. Obviously, this one was not a macro low, nor was this one, but these two were, of course, right here. And what we can observe from the prior ones is that after that major extreme was hit, there was a lot there, there was an immediate reaction, of course, but generally speaking, it was an immediate reaction into a range for months after that. And then the range gets broken in all cases to the upside, except for this one. Nope, this one got to go fuck itself. So fair enough. And also a volume extreme on the high right here as well, but I didn't mark these off, the highs that is. Anyways, we've seen the volume extreme, what is this, 1, 2, 3 weeks ago. So, what's most likely to be expected here? A lot of sideways, some bounce attempts. There might be another swipe of the lows, maybe a little bit lower overall. But I do think that in the short term to medium term, bears are starting to wear out their welcome a little bit. I do think what's most likely Bitcoin's really going to hit like the nasty downside bearish targets. You're going to see that in like 2023. Just personal opinion, but in this case right here, just another thing kind of on the same side as that, historically speaking. So again, take some time to kind of look at this. All of these have really ground out after that major volume extreme was hit for like 2 to 3 months. So expect more boring times, honestly, is what I'm saying from here. They're already fucking boring enough, but if you were around in 2018, 2019, very reminiscent of this right now. Very reminiscent, just ultra fucking boredom. And fair enough, I totally get it. Except for like the full on crypto TA nerds, this is just the time to be doing something else, man. Just do something else at this point. But yeah, okay, so we've gone through that. Now let's go on to actual indicators here. We can see that on the weekly RSI, we had some hidden bearish divergence. I'd say that that's mostly played out already. At some point, there's going to be some bullish divergence being formed over here. Do I think it forms from this exact moment? Probably not. No. Just seems a little bit too shallow of a drive to me. Would make a lot more sense if it came down like a little bit more, something like this, and then tried for a bit of a bounce. So, could that align with another attempt at the lows in the short to medium term? Perhaps yes. But ultimately there will be some sort of bullish divergence there at some point. I mean, 25 reads are pretty obnoxious, and also on Coinbase actually has never even gotten that low before. I'm sure it's been that low before if we were to go to the longest running historical chart here, which is actually the index. And actually, no, that's literally the lowest weekly RSI level we've ever seen. So, what's the likelihood that we go a little bit lower? Probably not very high. So naturally, divergence will form over the next month and a half or so. So again, just putting the puzzle piece together here. Now, taking it one step further, let's go and check out the weekly stochastic momentum, which we can find over here. And the weekly stochastic momentum does have a chance to turn to the upside this week, I guess. If Bitcoin can trade and close back above 16,840, I think it's maybe a little bit less likely. Looking at CME, it did close below its pivot, but not decisively, I'd say. So we're not really getting anything super helpful or super useful from that right now. But hey, if you do see Bitcoin close above that region, you're probably going to see an extension somewhere into the mid 17s. I would expect. Still, that kind of be like the range highs in this case. So still have to be looking at an overall range, at least in my opinion. But if we can take this just one more step further now, I want to go into the fundamental analysis right here. So this is a big focus on the monthly here because obviously the month is almost over. I think we have 3-4 days left in the trading month to go. There's 30 days in November, according to my calendar, which is really nice. And so looking at this, there's a lot of things of interest right here. So I always like to pull up this chart at the end of the month. But I guess if you want some hopium, there is some to be glazed from this. So first and foremost, let me go over what I'd like to present in a statistical manner. So the statistical manner, what I'm looking at right here is when the indicator itself turns from green to red, and then measuring that moment, like you'd see right here. So the circle area, that's when it turns from green to red, to the next major macro low. And so what I've done is I've gone through all of the previous 4 times where that's happened, and I measured off from where it turns again red to the next major macro low. And I found that on average, there was about a 61.34% correction from that time. What's very interesting about that is that we're literally on the average right now, basically. We actually traded a little bit below it, to be fair, 61.63, not a humongous difference right there. But, that's as fucking close as you're going to get, especially when we're talking about a major macro move where the slightest pixel change makes a humongous change in price. So what do you know? We've actually already hit that. Again, another thing kind of supporting that, hey, statistically speaking, we're closer to a low than not. Very, very likely. If we were to go for a first standard deviation analysis of this, we've obviously already hit the bottom side of the first standard deviation. We've already hit the average. So the next logical area of interest would be the 66.80% retracement. So let's just see where that would be. Let me just try to get as close as possible. 66.80, I think it was. That would put Bitcoin at 13,500 basically, which is, if you've been on the channel for a while now, the 2-day and the 5-day setups are kind of still in the same area as that. So I'll just briefly go over the 5-day right here. I won't go through the full rigmarole. We just got a 5-day closure last night. It's the same volatility versus stochastic momentum signature. Again, extreme lows on volatility lead towards expansion. Average moves, first standard deviation, you get the idea. There's no one new on this channel, so I don't need to explain this anymore. But basically, we had another 5-day close last night, and the 5-day stochastic momentum pivot has actually been basically unchanged. It's still well above $18,000. So I do think that in the short term, if we're going to see continuation, we probably do see it in this next week. This next 5-day period starting Monday. But at that point, you are going to start to hit this regression over here. And this number will most likely come down significantly, although I thought that last night, and that was certainly not the case. So that'd be a little bit of hopium on that side as well. As far as the rest of the hopium case goes, well, one, we do have a regression from the last few macro lows here, which it would theoretically be touching coming into the end of November. And then also the other major thing that I want to keep in mind with this is once we get into December, does the slope of this indicator change from a negative to a positive slope? Again, we saw it actually increase the downside on the last closure, so that's not really a good sign. But It can turn on a dime. That's definitely possible. We've seen in the past in 2018, 2019, for example. So if you do start to see that, that would be the next sort of major indication of a macro low being put in, basically somewhere reasonably close to this price. In the grand scheme of things. So just another thing that I wanted to kind of remind myself of for the longer term minded people here. A lot to get into in this particular video. So I think that's a good place for me to be leaving off. Yeah, once again, okay, we spoke about the sale. Yeah, so that's all good right there. Bybit's got their promotion going. They got $30,000 deposit bonus and 0% on maker fees. So that is that. I'd like to wish you the best of the best. Much love. Take care. And see you hopefully soon.